Depreciation. Guys, I had queries about depreciation, so I thought let me just do this first slide that will explain depreciation for you. The first slide we talk about depreciation without residual value, and then here are the example of your depreciation. Number one, straight line. Number two, reducing balancing method. Number three, production unit method. Purchase an asset, useful life 4 years, straight line depreciation. Purchase an asset, the entity depreciate 25 years per annum, reducing method. Purchase an asset of 100,000, the asset will produce 100 units. Current year production 5,000, next year production 3,000, last year production 2,000. Year 1, year 2, year 3. Let's look at the example. Number 1, straight line. Remember, depreciation without residual value. Number 1, year 1, 100,000 divided by 4 is equals to 25,000. Straightforward. This is how you calculate if it's a straight line. Why? Depreciation on cost every year. Year 2, 100 divided by 4 is equals to 25. Or you can use the carrying amount. But when you use a carrying amount, you use what? Remaining useful life, which is 75 divided by 3, 25. And you repeat the process over and over again. This is how you do your depreciation when you are using what? Straight line method. Let's go to method 2, reducing balancing method. Reducing balancing method again, year 1, 100,000 times 25%, because they say you're using this rate, 25,000. Or you can use a carrying amount approach. Just say 100,000 times 75%. How did you get 75%? 100% minus 25%. Then this will be my carrying amount. Here's the carrying amount. Year 2, depreciation. Depreciation is based on carrying amount. Here's the carrying amount, 75,000 of year 1 multiplied by 25%. It will give you this. Or you can do the approach of what? The carrying amount. Say 100,000 times 75 times 75, because you're in year 2, you multiply by 275s. Then you'll get the carrying amount of year 2. Then you do the same process all over and over. You can choose one. Then you go to number 3, production unit method. What you need to know, the cost and how much this machine will produce. Then you go there. Let's go to the example. Here's my cost. It's going to produce how much? 10,000. I know 100,000 divided by 10,000 times 5,000 of first year, it will give me 50,000. Or I can just go and determine my unit cost. How much is my unit cost? 100,000 divided by 10, it will give me 10 rand per unit cost. Every unit will cost me 10 rand when I produce. How many units did I produce? 5,000. 10,000 times 5,000, it gives me 50,000. It's the same as the one above. Come here to the same. 10,000 divided by 10 times 3,000 is equals to this. Or 10,000 times 3,000. And you can see what we are saying. Depreciation, it's on cost every year. Then this is how you calculate your depreciation. And number 2. Now we're saying depreciation with residual value. Again, I'm doing what? Straight line, reducing, and production unit. Now we're saying we purchase this, but it has what? A resale value of 10,000. Same information. Even this one, resale value of 10,000. Even with this one, resale value of 10,000. Let's look of how did we calculate depreciation. Straightforward, easy peasy. Depreciation is on cost. But remember now, we are not going to depreciate cost because of what? Residual value. We need to calculate depreciable amount. What is the depreciable amount? Is the amount that is allowed to be depreciated. Remember, residual value you can't depreciate because it's the value that you'll get at your end, at your end of useful life. So now we just say 100,000 minus what we can't depreciate. Then we'll get what? Depreciable amount of 90,000. Therefore, 100 minus 10,000 divided by 4, it will give us this. Why? It just say 90,000 divided by 4 is 22. the same logic will prevail to year 2, year 3, year 4. Straightforward. Let's go to number 2, reducing balancing method. Again, the first thing of the order of the day is to determine the depreciable amount. We know cost, we are not going to depreciate the whole cost, but we need what to remove the 10,000. Then it's the same. Year 2, remember the underlining where depreciation is based on carrying amount. I'll say 100,000 minus the depreciation of year 1, I'll get carrying amount in year 2 of 75. But remember again, the resale value, the residual value must be removed. Then I'll say 75 minus 10,000 times 28, I'll get this depreciation. Then year 3 and year 4, the same logic. It's straightforward. Then we go to number 3, production unit method. Again, 10,000 resale value. How do we do it? Straightforward, easy, because depreciation is on cost. First, we must determine what? The depreciable amount. We know we're not going to what? Depreciate the 100,000, but we need to what? To remove what is not depreciable. There's 10,000. What is our depreciable amount? 100,000 minus 10,000. Look, it doesn't change. We know that this machine will produce what? 10,000 unit. Therefore, 90,000 divided by 10,000 times 5 is equals to 45. If you look at it, our unit cost now is no longer 10 rand when we had what? When we didn't have residual. If you have a residual, your unit cost is 9 rand now. And the same logic we'll do in year 2. 100,000 minus 10,000 divided by 10,000 times 3, it gives you 27. So guys, please go and look at this depreciation. Look at the depreciation without residual value, how do we calculate it? And depreciation with residual value, how do you calculate it? I hope this will help you understand the difference of residual value and no residual value. So for any question, we're available through WhatsApp, email, on my Twitter, and we also, as accounting lecturers of Accounting 3, we have created your platform for you via Teams, where you can come and consult with us at the specific time that we have allocated you. Thank you and enjoy your day.